Welcome back to another episode of All in Society. And let's not waste any time. We got a lot to discuss today. We're going to provide a lot of information, hopefully to calm your nerves if you're someone invested and you're looking at the market right now and you're like, oh my goodness, it just keeps falling. And then you're looking at Bitcoin and crypto and Ethereum, that keeps falling. It just seems like there's nothing but negative news right now, but I'm going to give you some information. I think if we take some time to, number one, look out rather than being tunnel vision and just looking at what's been happening in the past week or so, because there's been so much going on with the government shutdown coming to the end, the Epstein files, which everyone is talking about. There's just so much that's going on in the market right now. So I think it'll do us some good for our for our heart and our health to just break this down and understand what's going on so we can make informed decisions and better decisions in the future and not let emotions drive our decisions that we make, because that is terrible. You can't do that in this game. We have to be emotionally strong, take emotions out of it altogether, do our research, lock in, and invest in what we know and what we understand. So let's dive right into it. First, I want to look at the fear and greed index. So we talked about this. The fear and greed index essentially just focuses on how market participants, so those of us that are invested in the stock market, what's the sentiment? How are we feeling? And as you can see here, we have dipped back into extreme fear territory. Okay? But I don't want you to trip about that. I don't want you to trip about that because, and we talked about this, and it might be your first time watching this, so I wanted to make sure that everyone gets this information. So last week there was some data that was put out by University of Michigan, and they stated that consumer sentiment is near an all-time low, like we just discussed. You can see right here. Well, that can be what's called contrarian bull signal to buy. Sentiment's extremely low, and for the most part, the fundamentals, outside of some frothy tech valuations, so a lot of these new AI companies that are not making any money, they're having a lot of investors throwing money at them. Fundamentals are pretty good. The companies that are leading the market right now are fundamentally sound companies. They have strong balance sheets. They have management that knows how to execute and has been executing for multiple years. So I'm comfortable keeping my money in the stock market because of that. But overall, with everything that's going on and some of the things that just came to the close, like the government shutdown, the economy, politics with Trump and the tariffs and everything, consumer sentiment is very low. But I'm a contrarian investor, so when everyone is fearful, you want to be greedy. And so there was some historical data that when consumer sentiment is that low, the next 3 months you get a 7.5% rise in share performance. And that happens 90% of the time when that sentiment hit this low and it triggered that bullish signal. So 90% of the time, in the next 3 months, the stock market will be up 7% or more. I'll take that. 90%, those are great odds, right? I'll continue to keep my money in the market, and I'll do it confidently. So I wanted to discuss that. I do want to hit on some charts, and we'll hit that in just a moment. But first, let's talk about Bitcoin first. So Bitcoin is below 100K. And yeah, I think this is pretty much the first time it's gone below 100K right now. Yeah, pretty much gone below 100K in the past month. So Bitcoin crypto is risk on. And right now, it's it's kind of trading and paired with the stock market. So right now, a lot of folks are risk off. A lot of the AI companies, the high flyers and the ones that are really pushing the market, a lot of folks are selling those shares. And so it's kind of the same thing that's happened in Bitcoin. Plus some other thing that's going on in the Bitcoin. I don't want to get too technical about that, but there's been a sell in Bitcoin and Ethereum as well. I personally would be buying here. As a long-term investor, this is a buying opportunity. I have been buying the past month or so pretty aggressively. Nothing any crazy. I'm always going to be, majority of my money is going to be in the stock market. But I do like to have some money that's allocated towards crypto. So again, I just wanted to point that out. I see it as a buying opportunity. Don't go crazy. It could definitely fall much lower than here. But I think those days where we get those really crazy fluctuations in price of Bitcoin, those days are kind of over. Not to say it won't happen and it can't happen. I just think those days are probably past us. Okay. So we talked about Bitcoin. We talked about the AI trade and those high valuations. The economy, is it really strong? We don't know because we haven't had any data in the past 40 days or so because of the government shutdown. And it doesn't look like we're going to get any data for the month of October. So we've been kind of flying blind. On top of everything else that is piling on what we discussed at the top of the video, it's hard to believe, or it's hard to stay invested when we're kind of flying blind. We don't have any data to support our our thesis and our thought process, and all you see is the tech stocks being sold and sold aggressively, but we don't really have anything to hold our hats on and say no, stay invested outside of what the companies are telling us. But the big boy Nvidia is in its quiet period. It's not really saying much outside of this conference, where Jensen Huang really spoke up the trade and pushed Nvidia shares higher. We have to wait till next week to hear exactly what's going on with Nvidia and the big boy to hopefully push this AI trade, or at least Nvidia. I don't really care about any other AI companies outside of a Meta or Amazon, Google, those heavy players. We're not going to know exactly what's going on until Nvidia reports earnings next week. But that's meaning we don't have a lot of time to wait for that information to come back to us. So let's just remain patient. Yeah, we don't have any data, and that means there's a lot of uncertainty. We already talked about consumer sentiment being low. So you see how this is all stacking on top of each other, and it's just weighing down the market. Okay. So essentially, we've been flying blind without any data. A lot of folks on CNBC that make decisions as far as the Fed and if they're going to cut rates or not, there was a strong belief that we were more than likely, the odds were highly in the favor that we were going to get another rate cut in December. Well, now there's a lot of folks saying, well, we don't know. We don't really have a whole lot of data, and I'm not sure what data the Fed has that's available to them, even though the government shutdown has been closed. I don't know if they're privy to more information or can get their own information even though the government shutdown is closed, or are they flying blind up like us as well? So that's another thing. A lot of folks thought we were going to get that rate cut, and so a lot of bets are coming off on that rate cut, and that's probably weighing down the overall market as well. Okay. All right. So now let's get into the charts. But first, because for me, I like to have these conversations and we can talk about it, right? But I like to have something to look at or in touch physically. So at least we can look at the charts and we can play with the charts, and we can see where we've been in the past and hopefully give us an indication of where we're going. And don't forget, I did want to add Michael Burry, a big short guy. There was a lot of news today that he's shorting the AI trade, companies like Nvidia. He's saying they're overvaluating their numbers, their depreciation of those chips, and it's making their numbers more inflated, making them look like they're doing better than they actually are. And so that's getting a lot of attention as well. So it's just so much that's going on, and it's a lot of negative news. And quite honestly, before we get into the charts and stuff, I think they're doing this because a lot of fund managers, a lot of the big boys, I think that they're putting out a lot of this negative information because a lot of those funds are not doing that well. They're probably not performing as well as the S&P 500 has performed year to date. So there's a lot of information that's coming out to push down the market, and then for them to jump in when the market is low to ride it back higher so they can say, look, we're invested in these companies that are the high flyers and we're going to invest in them into 2026. So it's a lot of like, I'm not sure if smoke and mirrors is what the lingo I'm looking for, but it's just a lot of BS that's going on right now to push shares down, especially when you hear a lot of information this year that the retail investor, the individual investor like myself and you, are the ones that really been making the money this year because they've been buying the dip and buying the dip aggressively and riding it up since April. So congratulations to you that's invested, and you stayed invested and you rode through this very volatile market. So kudos to you. And you know you're if you're watching this video and maybe you're not invested, you have your retirement account, but something's clicking and you're like, you know what? I want to be able to make some money for myself. I don't have to clock into work to make some money on the side. If you're like myself, you want to become more independent and not have someone else dictate your life. Then now is the time to lock in. And so if you like this video, you like what you hear, before we jumped into the charts and push it a little bit further, definitely check out our Patreon. You can join for free 99. It costs you nothing to get videos like this and other information I put in there on a daily and a weekly basis. You can get that for free. And then if you really want to get busy, if you want to learn to trade and learn our strategies and how we are taking money out of the market every month on a consistent basis with winning strategies, proven strategies over the long term, with long-term investing and options investing, you can join the Patreon, and it is only $10 a month. And you can see our trades in real time, and you get all of the tools and everything that I use to dissect the market and to determine whether a company is fairly priced, overpriced, or underpriced. Okay? So we're not going to focus too much on individual stocks today. I really wanted to kind of focus on the scoreboards. And if you're first time here, I call the scoreboards the major indexes, which is the S&P 500, the NASDAQ, and then the Dow. So you can see they got hit pretty hard today. S&P 500 is down 1.6% today. Tech-heavy NASDAQ, so tech shares are selling off. So the NASDAQ's going to sell off today aggressively, down over 2%. And the Dow's down 1.65% today. A lot of that had to do with Disney. Disney reported, and I think their shares were down about 8%, maybe 5% or so if they came back. But I guess investors didn't like to hear what they had to say. Plus, they reported in a day was bloody red, so it was kind of bad for them. I know their cable, their linear business, I think they call it, not the streaming business, is still continuing to lose money. And it's weighing on them, but the parks and the experiences with the cruises and things like that, that business is doing really well, the entertainment business. And ESPN is cooking some new things as well. So they just reported, if you want to look at that, definitely start. A company that's fun to listen to their earnings report is Disney. So if you're not someone who's ever listened to our earnings report, just Google Disney Investor Relations, and then you should be able to see there's a webcast, and they usually have it on there even after it was posted. You can listen to that webcast, and I think maybe even Disney has like a video, so you can see Bob Iger and the other executives talk about the company and how it's performing. So definitely check that out. Disney's pretty much everybody understands Disney's company and how they make money, right? So I think that's a great company to start looking at earnings reports. If you've never done it before, that's your homework. But yeah, so overall the market was got beat up today. But I did want to talk about the VIX. Okay, so if you haven't heard about the VIX is the volatility index. And volatility, basically, when this number here, right now it's at 20. When when the VIX rises, typically the stock market overall is moving lower. So we see a huge spike in the VIX today, and then we get major sell-offs. These are big sell-offs, 2%, 1%, in the major indexes. Those are big sell-offs in one day. So when the VIX is up, that means typically the overall market is down. Not all the time, but when you get a major spike like this, 9 times out of 10, you're going to look at the major indexes and say, oh, yep, that's, I knew that because I saw the VIX. So if you don't have the VIX on your watch list, make sure you add it to your watch list. But I want to show you something. So this is over the past 6 months. So I want you to look at here. The last time the VIX spiked to 20 or above was November 7th. Okay. Now this is the VIX. Remember the date, November 7th. There was a spike in the VIX. It rose above 20. Okay. Remember, when the VIX goes up, valuations go down, and your equities and the indexes. Okay. But you see on November 7th, after November 7th, you get that big drop. And I'll show you exactly what happened when you see the VIX spike like that and it drops back down pretty quick. So remember, November 7th, we're going to go over the S&P 500, and we're going to look at November 7th. Well, why don't you look at that? This is the month chart, and you can see it in this range this past month. It's at the low. The shares are at the low when the VIX spiked to 20. But then look what happened after that. It ran up, and it ran up almost to where its 52-week range was, almost at 6,900 range. Okay? So we got a big spike in the VIX, which means volatility was high and people were selling in the market. People were fearful. And then after that, you see a big run up. Okay? Now, let's look at it again. We're going back to the VIX. We said November 7th, we saw that spike, and then it shot back down into the 17 range, right? Let's go back to October 22nd, where we see this VIX spike to 20 again. Okay? And then it tapered back down, right? October 22nd. Now let's go back over to the S&P 500. 1 month chart, October 22nd. Now, it wasn't the lowest in this range, the 1 month range for S&P 500, but look what happened after this. You got a run up. And actually, the run up was to the new high of the S&P 500. Okay? So when the VIX spikes to 20 or above, we see the S&P 500. We can even look at the NASDAQ. We said November 7th. Look, in the NASDAQ, the tech-heavy NASDAQ. November 7th, and you got the run up. October 22nd, you got the sell off, and then you got the run up. I'm not saying history is going to repeat itself, and it's going to do this immediately, but you saw the trend there, and I showed you twice in the past month. Okay? So I'm not going to, it's Friday, right? And there's a lot that went on. I think we got to be very careful. I think Trump is he's on pins and needles right now with these Epstein files. He might come unhinged this weekend. So be careful. If you do see that tomorrow morning, we get that spike in the VIX today. And then if it goes back lower tomorrow morning to that 17 range in the VIX, a little bit more balanced level, be careful going crazy into the weekend, because we don't know what this dude is going to say this weekend. So I did want to show you that, but I wanted to, I don't want everybody to see the VIX spike to 20 and then we see it shoot back down, and then we see the S&P 500, the NASDAQ rebound, and you put all your chips in, and then Trump just screws that all up and the VIX spikes to $30 or $40 or something. So just be mindful. Don't go crazy when you see this. But last thing I wanted to show you is the charts. And I wanted to show you the QQQ. Okay, and so we're going to talk about demand zones and supply zones. Okay, so demand zone, think of it this way. Demand zone is high demand. It means people are buying. So think of demand as buying, right? Supply zone means people are selling and then there's more shares that are available. That means there is a downturn like it is right here, okay? So this is a month chart of the QQQ, the tech heavy QQQ that mirrors the NASDAQ. And we're going to identify some demand zones and some supply zones. So first, let's look at the supply zone because that's pretty much where we are at right now. So we see where we want to go. Let's look right here, okay? We see, and I hope you can see my cursor. Yeah, I think you guys can see it. I'm just trying to make it a little bit bigger for you guys. Okay, but we see right here on November 3rd, we see the shares right up.